Hello, and welcome to this webinar introducing BS ISO 14054, the International Standard on Natural Capital Accounting for Organizations. BSI, the British Standards Institution, which this year celebrates 125 years since its founding, is the UK's national standards body appointed by the government to develop British standards and represent the UK's interests in standards development at European and international level. We bring together a community of over 12,000 experts from industry, government, public bodies, and consumer groups to develop purpose-driven standards that create positive change. We organize and manage national technical committees such as SCS 18 for Natural Capital, who has developed BS ISO 14054, and from whose chair and project leader you'll hear from today. BSI represents the UK's views in ISO, the International Organization for Standardization, which brings global experts together in similarly formed technical groups. One such technical group is ISO TC207 Subcommittee 1 on Environmental Management Systems, which is managed by BSI and led by its appointed chair, Martin Baxter, from whom you'll hear shortly. Subcommittee 1 is responsible for the development and management of the ISO 14000 family of standards, which includes the well-known ISO 14001 and ISO 14054, which we're introducing to you today. ISO 14054 was developed following the publication of the British Standard 8632 in 2021, which acted as its base text and was expanded upon by the international working group led by Ege and Steph, from whom you'll also hear today. We hope that by the end of this event, you'll have a better understanding of BS ISO 14054 and its role as a formal international standard, its benefits, and how it could support you, as well as a broader view of natural capital as an increasingly emerging area. Now, a bit of housekeeping. This is a listen-only event, so microphones and cameras will be turned off. If you have any questions, please submit these using the question button at the top right of your screen. We'll address your questions towards the end of the event. And finally, if you experience any technical issues, please report them through the same questions box. We have a wonderful agenda lined up for you today. First, we'll hear from Martin, the Deputy Chief Executive at the Institute of Sustainability and Environmental Professionals and long-standing chair of the ISO Technical Subcommittee 1 on Environmental Management Systems, responsible for the development and maintenance of the ISO 14000 family of standards. He'll take us through, among other topics, through the environmental drivers, the importance of nature, and putting environmental data into practice. We'll then hear from Ege at FTech and Steph at Little Blue Research Limited on how BS ISO 14054 was developed, its application, and links to other topic areas and standards and their own roles in this project. They will be followed by Mark and the Capitals Coalition, who will talk to us about natural capital in forestry and scaling up nature. And finally, we'll hear from Ian and the UK Network for Environmental Economists on using natural capital accounts in decision-making, economic valuation, and nature markets. We'll then end with a Q&A session and closing remarks. Our speaker slides will be made available to you all after the event ends. Now, without further ado, I will hand you over to Martin.
Great. Well, thank you, Andrea, and fantastic to see so many people joining this session. Good day, wherever you are in the world. I know that a large number of people are outside the UK, which is fantastic because we're talking about an international standard today. If you go on to the next slide, please. So I'm just going to provide a very short lens to help to set the scene. One, looking at environment and why this matters, but also just to give a little bit of an insight into why this is a really important topic for ISO and the global standards community. We know that our natural world is under severe pressure, whether it's our freshwater systems, the quality of our biodiversity, soil health, air quality, our marine environment, all are facing significant degradation. And this matters because of the interdependence of our natural systems with our social and economic systems. And if you go on to the next slide, please, I think this is captured in a really effective way by this quote from Sir Bob Watson. So this is part of the Intergovernmental Science Policy Platform on Biodiversity and Ecosystem Services. That is the last time I'm going to be saying that in full in this webinar. But IPBES is the scientific body that provides insight and evidence to policymakers in the Convention on Biological Diversity. And this quote from Sir Bob is, "The health of ecosystems on which we and all other species depend is deteriorating more rapidly than ever. We are eroding the very foundations of our economies, livelihoods, food security, health and quality of life worldwide." Now that was from 2019, and next week IPBES will be convening in Manchester to look at the latest science and also look at this from a business perspective. And if you are interested in this subject, which I'm sure you must be joining this webinar, then please do look out for the conclusions and the reports and the evidence base that will come forward next week, because it is going to really inform policy decisions and the way in which businesses need to consider these issues in order to move forward. It's not just the natural capital evidence base, which is looking at this from a systems, an environmental and natural systems degradation perspective. But recently, a couple of weeks ago, the World Economic Forum published its global risk reports. And when you look at that and look what business see as being significant long-term threats, so for them they look at a 10-year horizon on those long-term threats, then what we see is in the top 10, 5 of them relate to the environment, whether it's biodiversity and ecosystems collapse, whether it's climate change and extreme weather effects. All of these are seen as being really critical issues for business to not just have on their radar, but actually start to bring things into the organization on which to be able to take action. And another follow-up on this is, of course, the UK government recently published its National Security Assessment on global biodiversity loss, ecosystem collapse and national security. This is really important. One is the government wasn't really that interested in publishing this because it was quite significant conclusions, but Freedom of Information managed to managed to bring this to light. But what it recognizes is the national security threats associated with global economic ecosystem degradation and collapse, which threaten prosperity and national security. Secondly, it recognizes with a high level of confidence that ecosystem degradation is occurring across all regions. Every critical ecosystem is on a pathway to collapse. And that has to be a massive concern for everybody, particularly because critical ecosystems that support global food production areas and impact global climate, water and weather cycles are really important to UK national security. And clearly they're of critical issue for all countries' national security. And when these threats start to materialize, then they drive change, and that change can be destabilizing, it can be expensive, and it affects people in lots of different negative ways. So tackling this crisis is absolutely critical. And really it's about looking and saying, how do we bring this evidence to bear into decision making, not just at national level, but at organizational level as well. And this is why Natural Capital Accounting Standard 14054 is so important and so timely. And hopefully during this webinar, you'll get a real insight into what it means in practice and how you can start to build up your experience of using it to inform the way in which you deal with some of these issues. Now, if we go to the next slide, there's an important question about why ISO. And in part, we can see that there's a lot of activity around the way in which we look at nature dependencies, the way in which we might report on those and disclose performance about them. There's an argument in some quarters that say, question why we need more standards in this area. But I think the really important part here is that ISO has a global portfolio of standards which are used everywhere. And those global standards underpin trust for economic actors in all parts of the world to be able to have mutual recognition of the standards and the methodologies, the terminology which is used, and that kind of unseen architecture that underpins global trade and kind of national and supply chain activity, I think, is really important. So whether it's products, management processes, testing and inspection, ISO standards help to provide that connection and that glue in our economic architecture to support that activity. So whether it's the water that you were drinking today, which was probably has been tested in an accredited laboratory using ISO standards, and the methodology for actually assessing the quality of that water would be an ISO standard. Whether it's the products that we're using for this webinar would have been ISO and IEC, kind of the electrotechnical equivalent, allows us to connect seamlessly wherever we are in the world. And so that kind of that market penetration of standards is really important as bringing in sustainability. And ISO has recognized this. I've been involved in international standardization with ISO for over 20 years on a wide range of issues. I have the privilege of chairing the international standard, the technical subcommittee responsible for a number of standards. I think I have 15 in my community, in my portfolio, including things like material flow cost accounting, natural capital accounting, economic valuation of environmental impacts and aspects, and ISO 14001. And these are important because they are recognized by policymakers and regulators. We see them being integrated into national legislation as requirements. We also see them being used in national procurement, government procurement, as well as private sector procurement. And of course, some of them are used and required by regulators to determine how organizations are operating. And all of that is supported by independent accredited conformity assessment. I think this last point is really important because market recognition, how does business do business? International standards are a critical part of that. And so the ISO 14001 standard, which I'm is in our portfolio and is also going through an update at the moment, will be published. The new edition should be published in the middle of April. It's used by millions of organizations around the world, so too on quality, on safety and health, on asset management. But it's all countries, all sectors, public sector, private sector, no matter how large or small your organization, ISO standards are being utilized to drive business and organizational improvement. And that's why it's really important that ISO has within its portfolio not just the climate standards, which are really important, not just the generic environmental management system standards, which provide a framework for some of these specific topic areas, but also ISO providing kind of content and methodologies that support considerations of biodiversity. So there's a biodiversity standard on how to build that into your strategy and operations, and this natural capital accounting standard as well. So I'm sure you're going to find this webinar really useful and insightful. We will have a Q&A session towards the end, as Andrea mentioned, so please do use the chat function to submit questions for any or all of the panelists. But now it's my real pleasure to hand over to Etchi, who's one of the conveners of the standard, the working group that developed the standard, to give some detailed insight into what it's all about. Over to you, Etchi.
Thank you very much, Martin, for that wonderful context setting. Our part of the presentation is going to be a two-part show with Dr. Stephanie Heim, my project leader that worked on the working group that prepared ISO 14054, but we also both sit at the BSI SES 1.8 Committee on Assessing and Valuing Natural Capital. And we're going to take you through why and how we got here, what's in the standard, and why and how you can use it. And we will also, at the end of our slot, share some learnings from the practice to date. Stephanie will take us through the detail of the document and show you the natural capital accounting outputs. We're both environmental economists. Steph has some science background as well that she will tell you about, no doubt. And we are very proud as environmental economists to be able to contribute to this field and bring lots of different information and lots of different people together. In my next slide, is, I think, one of the main drivers for all this work, and perhaps in the words of an economist, repeating what Martin put to us from the environmental context. We all know how important nature is. Unfortunately, when it comes to making decisions, sometimes we forget that importance, because the prevailing assumption has been that nature is freely available. We can substitute it with some other capital asset. It will take care of itself, or someone else will take care of it for us. However, that assumption, luckily, in the last decade or so, has been rapidly changing, has been rapidly shown to be wrong and untenable. And there are three main reasons for that. Is because people, as consumers and citizens, are asking for that change. They're asking for more sustainable products and services. Policymakers are aware that public money is not enough to look after nature, but also they have a role to show leadership on how business models can change to incorporate nature's value into their assessments and decision making. And businesses themselves and investors in businesses are also changing their views about nature-related risks and opportunities, because more and more of us are experiencing nature-related risks, and it is becoming easier and more explicit to link the risks and importance of nature to financial performance and longevity of businesses and investments in them. This different thinking, replacing this particular assumption, requires multidisciplinary information, involvement from all sorts of departments within a business, and all sorts of ministries at the public sector level, and organizations, of course. And the methods that are created need to be bespoke, because nature is varied, and businesses are varied as well, and so are decisions. So methods might be standard, but the applications need to be bespoke. They need to be bespoke but comparable. We want to be able to compare the decisions we made and the methods we applied over time, over space, and over businesses and organizations. The approaches that we follow need to be complex enough to take care of the variety of nature and to take care of the variety of decisions, but not so complicated that it stops organizations from attempting to change and learn, attempting to include the value of nature into their decision making. And this really sets the scene nicely for an international standard, because international standards show us what good practice looks like. They are flexible to allow companies, or at least 14,054 type standards are flexible to apply bespoke applications, but in return they ask for transparency and documentation of the decisions and application that has gone all along. So let's go back to go to the next slide and establish that we are talking about the same natural capital. This definition appears in the standards, and it is by now a common definition, but we want to point out three things that are fundamental about understanding this standard. First of all, natural capital definition here includes both living and non-living aspects of the natural environment. This is quite a common understanding too. We also want to point out that natural capital underpins all other capitals. Yes, it says natural capital in the title of this standard and natural capital accounting. However, whilst the assets might be natural capital, we know that nature gives us many different types of benefits, and natural capital accounting can show all of those different benefits. So it could be in terms of financial flows, it could be in terms of improved human health and well-being, environmental improvements, increased resilience of manufactured capital like infrastructure. There is space for showing all of those in a natural capital account. Final point of importance is ownership. Natural capital appears in financial accounts of companies already if they own the natural capital or if they use ecosystem goods and services as an input to production. However, the kind of accounting we're talking about is not limited to ownership of natural capital. It covers all impacts and dependencies of an organization and its value chain, should you want to include that, on all natural capital, whether it's owned by the organization, whether it's owned by someone else, or it's not owned at all and it's a public good. In the next slide, we have some good reasons why you may want to prepare a natural capital account. The first set of reasons is that to increase awareness of impacts, dependencies, risks, and opportunities. Natural capital accounting is a bridge between financial accounts and corporate disclosures like TNFD, because we use information from financial accounts, environmental assessments, and everything else, and we can feed into the disclosures like TNFD, making the process much smoother. And we want to not only understand risks and opportunities, impacts, dependencies, but we want to be able to communicate them as well. And we also want to use that information actively. Natural capital accounting is not a bookkeeping exercise alone. It can be used as a management accounting tool, like for scenario analysis, for example, or for transition planning of what actions should be taken to actually put this information into practice. They're in the next set of bullet points on this slide. If I can have the next bullet points, please. So it's very important to keep in mind that we do want the natural capital accounts to be live documents to follow your decisions, deliberations, and an also important final point, to monitor the effectiveness and efficiency of the actions you take for managing, improving natural capital account. And our colleague Ian Dickey from FTech and ACNI at the end will tell you more about how accounting can be used for nature market transactions and transparency. So how did we get here? How did we prepare 14,054? In the next slide, please. Yeah. So you might have heard the terms natural capital accounting for the last 10 years or so. However, both the natural capital thinking and natural capital accounting benefit from decades of environmental science, environmental management, economics, and many other disciplines that I have failed to put here. So rest assured that it may be new to you as a practice, as a term, but the components of it is not new. It's a fantastic opportunity to bring all of that together. The first time we did that as a standard was, as Andrea mentioned, BS 8632, which was published in 2021. Couple of years on, we wanted to take it to the international arena. So we wrote a proposal for ISO. And then in October 2025, we published 14,054. We wanted to do this because we wanted to benefit from a more multidisciplinary and international working group. And we also wanted to benefit from international public consultation. So we received over 1,000, if not more, comments in 2 rounds of public consultations and more committee level consultations as well. What has changed between the BSI standard and the ISO standard in the next couple of bullets? Not much in the sense that the principle remains the same, but the ISO 14,054 does benefit from the international practice that took place between 2001 and 5, and there has been a rapid increase in the practice. We added clarity to terms. We realized that all these different disciplines that are coming together might mean the same thing, but they use different language, they have different affinity to different data sets and metrics. So we try to acknowledge them all and not dictate what's used, but as I said, ask for reporting. We also, we believe, took better care of how we account for impacts, dependencies, and treating time. Talking of time, this has been a timeline of massive change in the next slide, you'll see, don't worry, I will not talk through all of those. Or maybe actually is that, sorry, that's the slide after. Why this? And I think Martin explained some of these, why an international standard. I pick off a couple of things that he didn't mention, is that we are aligned to the national natural accounts in principle. Of course, application from national accounts to organizational accounts is different, but the principles are aligned to UNCIA. We do apply, like all other standards, to all sectors, types and sizes, and we cover all impacts and dependencies. In the sense that covering those impacts dependencies is up to the user. We just show what the good process looks like. Next, please. And I can't overemphasize this. This is very complex, but where you start, how you start is up to you when you use the standard, and it gives you the freedom to start as small as you like, use what data you have already, and make methodological choices that fit to your context. However, in return, the standard asks for documentation of all those decisions that are made so that they are transparent, and the decisions, the information created is decision useful and defensible. Okay, so timeline. I said a lot has happened before this standard. We don't want to add another document, and you can see in the next slide that a lot has been happening already, but we are aware of this. What's happened? We're aware of a lot happening, and we want to make sure that we add the rigor and international acceptance of an international standard, but not add extra work for you. All of these documentations that are listed in this slide have led to the process that we are recommending as good practice in ISO 14054. Next slide, please. The 3 things are very important to pick up, because we get asked about this a lot, and you might recognize this from TNFD documentation. Let me tell you about how 14054 fit before we move on to Steph. Natural capital accounting can help you adopt TNFD. In particular, it can help you value assets, liabilities, revenue, and expenses, and assess part of the LEAF process, in particular in physical and value provision of natural capital benefits. It can help you with science-based targets for nature. In the next click, it can input to targets and priorities. It can help you do options appraisal through scenario analysis and transition planning. It can help you with the financial accounting, IFRS sessions, help you with accounting for intangibles, input to potential for materiality assessment, both in this document and elsewhere. At the EU level, it has a place in implementing the ESRS, what would make businesses resilient, for example. It can help you answer that question. And in the international level, transition plans and scenario analysis asked by IPCC and IPBES can be a lot easier to create if you followed a natural capital accounting process. Over to you, Steph, now to see what's in the document itself.
Hello there, my camera is just playing up for a moment, so I'll try and fix that as we go, but as I'm doing it, oh, there we go. Now you have a picture without me on the camera, but I think there I am. So hello everybody and good morning, and thank you for taking the time to tune in and find out about BS ISO 14054. As Ejay kindly introduced me a little bit earlier on, I'll be brief on that. I've been the project lead on the ISO standard for the last 2 years, and part of that has really been this working with an international group coming from a really diverse set of disciplines to come up with a standard that we think is really practical and that we can really show value through implementation. So what I'm going to do is take you through some of the details. So if we can click to the next slide, please. Okay, so what's in it? Well, ISO standards have a form that I'm sure many of you are aware of, but just for clarity, we have a scope describing what the standard covers, terms, key terms and definitions. These are aligned with ISO terms and definitions, and where needed, adapted. And I think, as Ejay pointed out, the developments since 2021, since the BSI standard was launched, have been quite significant. So some updates in that terminology were necessary, and also necessary to get that international context within the standard. We also have a set of underlying principles described, and then the process of preparing a natural capital account. We've set out a separate section in relation to data and conducting data quality assessment, providing some high-level overviews of what's needed to really make a natural capital account. And then clauses 7 and 8 focus specifically on how to produce a natural capital income statement and a natural capital balance sheet, which are the two key outputs of the process. And I'll go into those in a little bit more detail in later slides. Finally, we have a documentation, an interpretation and integration section, and annexes with additional detail and examples. So if I could go to the next slide, please. Okay, so how do we produce a natural capital account? What is the process? And to do this, you really need to think about how you're going to start and prepare the questions. So first of all, define the purpose of the NCA, and then ask questions about the organisation, interested parties, select the scope of the natural capital accounts. I think Ian will later cover some of these in more details, and then select the type of output that you want to produce. So in a way, these first 5 boxes are questions that you need to answer before undertaking natural capital account, but then the last 2 are things that are underpinning for each type of output. So preparing a natural capital register and undertaking a materiality analysis. If you could click through, that will show that out of this initial process, we can have 2 different kinds of output. And moving on, we can see that all of this whole process has to be documented, and it's really key because it's where our flexibility of the standard comes in. We need people to document, we need businesses to document what decisions were made about the scope, what elements they could or couldn't include within the account, and the reasoning behind it, so that they're comparable across different organizations, and also to allow us to really interpret the outputs of the process. So we're going to step through each of those outputs. So if we go to the next slide, we're going to start off with the natural capital income statement, which shows the increases and decreases of natural capital benefits, and it's based on the activities that have taken place already. So it's backward looking over a set accounting period that you choose. It aligns with financial income statement, and it includes both impacts and dependencies. And if we do the next click, please. There we go. So that natural capital income statement can either focus on only the organization, so your own operations, or it can include the value chain scope, which would be upstream and downstream right the way through your value chain, or an extended scope, which means looking at the activities both inside and outside your organization, looking at external influences within a particular context. So you have some choices to make here about your natural capital income statement. If we go to the next slide, please. So that natural capital income statement's underpinned by our natural capital register, which we saw from our initial slides, and that's going to show the extent and condition of the natural capital that we're looking at for this natural capital income statement. So it's what you own, what you don't own, the extent and condition of all those different elements, the habitat types that you're looking at. And alongside that, we're looking at, over the course of, say, a year, the business activities that have happened, what the change in ecosystem service flows have been during that time in biophysical units and then in monetary units. And we're looking at the ones that increased and the ones that have decreased. And all of those are underpinning supporting schedules for our natural capital income statement. So if we go to the next slide, we can show you what one of those could look like. And it's important to note that we have more detailed examples in the annex of the standard so that you can look through what could be included and the notes to the accounts. So this is a very simple example that I'm only going to have some key takeaways from. So the key point about this output is it's backward looking, it's previous things, it's the activities that have already happened, and it's that alignment with financial statements that's of interest. The notes in the account at the end of the account will set out things like the data, the sources, the assumptions, so that if someone comes to this output and sees these numbers, they understand where those numbers have come from, what valuation evidence has been used, what are the references, what are a summary of some of the methods that have been used to calculate them. And the key part about both outputs from a natural capital accounting process is that there is a value to the organization and a value to society. And this is really important. It's important because when using environmental economics, it's often that these two values are meshed together. And that's not necessarily very useful for business decision making. We need to understand what the impact on our business is going to be, whether it's positive or negative. We also need to understand if we're impacting society in a positive or negative way. And that leads us potentially to look at a more holistic way of making decisions with our information. But I will come back to some of those points later on, as I'm sure other panelists will. I think the last point I'll make is that piece at the bottom, net contribution to natural capital benefits. So that is the summary output at the end. And really what we're trying to see with this output is those figures are all output together. So not using one in isolation without the context of some of the others. It doesn't have to be disclosed. As Ejay said, this is about thinking through decision making in a business or an organization that's applying the standards. So it's up to the organization applying the standard, whether this is for internal or external consumption. So if we can move on to the next slide, please. And we're going to look at the natural capital balance sheet now. And I think this one for me is super exciting because it's looking at both the changes in natural capital values, but also production and maintenance costs, and it's future looking, which means we're going to try and think about what changes in natural capital are going to look like in a in a time horizon of 5, 10, 20, 30 years, depending on the context. And we're going to see whether the money that we have put aside to produce our goods and services that rely on ecosystem goods and services flowing into our business, whether that's sufficient to give us the flows that we need to function. It's underpinned by scenario analysis, and it also includes impact and dependencies. And if we click again, please. As we can see, just as before, we have the 3 options of scope. So focusing on your own operations, focusing on the value chain scope, or focusing on extended value chain. And if we click to the next slide. Thank you very much. You can see here that there's quite a few supporting schedules, a little bit more. So we've got our natural capital register, which we've already talked about, a natural capital risk register. So this time we're also thinking about where and how our natural capital might be at risk of various different things. We also then have a physical flow account. And what we mean by this is our expectation of what ecosystem services are going to deliver us over a future time period. And we're going to need to have that in ecological measures and measures that can then be used to help us value the change that we expect in our monetary flow account. So this is where the more environmental economics underpinnings come in. And alongside that, we're going to need to understand our costs, so production and maintenance costs. So it's quite a lot of information, but what's really key here is because it's future looking, because it seeks to quantify these aspects, and because we seek to quantify both the value to business and value to society, it's an extremely powerful tool to aid in transition planning and the consideration of what interventions or what plans make most sense for business. If we go to the next slide, please. Okay, so as a final slide from me, here's an output, an example output of a natural capital balance sheet. Again, it's the key is that value to organization and the rest of society side by side. The key is, in this case, we've looked at a 30-year time period. But what's interesting about it is we've got one balance sheet here. But if you're doing scenario analysis, you can put out several different versions of the balance sheet to show what different interventions, what different decisions or different assumptions might mean for your business. And you can have a broader picture as to how you might need to operate into the future. I think, again, we've got our notes set out at the bottom of this table, and we also have a retained net contribution to natural capital benefits. So if you have done a natural capital income statement and a natural capital balance sheet, you don't have to do both, but if you did both while you were doing a natural capital account, this line links them together. So that retained profit is the end of our natural capital income statement, so our final values, and then our natural capital balance sheets, like from day 0 into the future. So that's the link between the two. I hope that has given you some food for thought, really, about where this tool could be most useful for your organization. And I'd like to just hand back to Eddie to talk through some examples. Thank you.
Thank you, Steph. So we're writing this standard, but who's using it and why? I will give just an overview of the kind of experience in practice that we have. This map shows the locations that only Little Blue and FTech have covered in our portfolios. So it's less than what the practice is at the moment. And it's a mixture of individual organizations, both public and private, and investors in natural capital through, in particular, agriculture, forestry, and other land management like infrastructure companies that own land. Marine examples also exist, in particular for public sector organizations. It's good coverage considering we're 2 SMEs doing this work, and it's also coverage of companies that are more or less public with their natural capital accounting experiences. 14,054, as Steph said, is not necessarily for disclosure, and there are a lot more organizations who are doing natural capital accounting and not necessarily disclosing it yet. In the next slide, we've compiled some learnings from that variety of experiences that we've had, rather than do deep dives into individual examples. And there are 3 sets of lessons from practice. First of all, clients tell us that natural capital accounting helps them make better business case for investing in nature, whether that be restoration or enhancement. It has helped them prove that there are multiple returns to investing in nature, some of which is for the organization directly, but some of which is for their stakeholders, whether that be their neighbors in a catchment, for example, or even further away stakeholders, and also rest of society in terms of general welfare and well-being. And these multiple benefits are of interest to different types of funders. So it could be different type pockets of public funding, or it could be different in private investors. Second set of, if you click, we can see the second set of learnings from practice. Clients tell us that going through the natural capital accounting process, and they have applied this in different scales, it increased the organization's awareness of their impacts and dependencies within the organization. So the environment department might be very aware of the importance of nature for the organization, but maybe finance department not so much. So going through the accounting process together helps spread that awareness across different departments of an organization, and also communicate that awareness with external stakeholders as well. And those stakeholders might in fact be providing information into the natural capital accounting. We have one client, for example, who did a natural capital account for their own organization first, and then expanded to the region of the country they're based in to have a regional several catchment-based natural capital account, so that the account can contribute to the discussions and negotiations between different landowners and users as to how their individual users affect each other and affect nature. So it's a contribution to better discussions among organizations. And there is a mention of this in the standard itself, that it doesn't have to be used by a single organization. It could be used by groups of organizations as well. And Steph made it very clear in showing you the examples of impacts, income statements and balance sheets, that we do show values to the organization and value to the rest of the society. And that is a very important distinction that some businesses had not thought about before. At least they had not thought about the positive impacts they might have for the rest of the society. And final set of lessons we're learning is that going through the natural capital accounting process helps create operational efficiencies. So in addition to better communication horizontally, say between different departments of an organization, we also see vertical communication improve. So first time a site manager gets to speak to the board, for example. It also helps us improve data efficiency. Lots of organizations actually collect more data than they think. And we get asked a lot whether they will have enough data to do a natural capital accounting. Start with what you have, and the process of natural capital accounting will help you prioritize what kind of data is actually decision useful, and what kind of data you have to collect for regulatory reasons. But do some consolidation, some organization on the data front is definitely something that natural capital accounting can help you to do. And more clients who are deciding to adopt TNFD, for example, are saying to us that having done a natural capital account before has made that decision a lot easier, and also adoption process a lot easier as well, because very similar types of data are needed for both natural capital accounting and TNFD, and natural capital accounting introduces the accounting discipline to the way that they collect and manage that data. So this concludes our part of the presentation. I will hand over to Mark Goff now to tell us about what the Capitals Coalition has been doing that is very relevant and covers some of the natural capital accounting process. Mark, you are the founder and CEO of Capitals Coalition. You came on mic, so we got an echo, but I'll hand over to you and mute myself. It's okay, you can introduce yourself better. Over to you, Mark.
Thank you, Etche, and really exciting to see this development here. My job today is to put some of this into context more globally around some of the other things that are going on in this space, but also to show how this ISO 14054 can actually be applied in practice as well. So if we can go to the next slide. The Capitals Coalition, I seem to have lost myself. There we go. The Capitals Coalition has been around since 2012. We came out of the Rio+20 events and was really a forming at that time of all of the different initiatives that were there. There were around 40 different approaches to natural capital, and we were all fighting between ourselves over who was the best and who did the best methods, and decided to start collaborating and fighting over delivery rather than fighting over methods. And that's what formed the Natural Capital Coalition back then. All of the people that you've heard speaking today have been involved in many of these activities. And if we can go on to the next slide, the global community that comes together through this is around 30,000 people, around 13,000 organizations globally. We've got around 500 organizations at the core, including banks, governments, financial institutions. And we'll be rolling out this ISO standard to all of them and making sure they're aware of it and able to use it in their work. We also have 18 hubs, but one of our partners, GSG Impact, has another 50. So we're up to about 70 or so different hubs around the world in different countries and regions, plus a lot of governments that are applying natural capital work. We just wrote a letter last week to the high-level expert group looking at gross domestic product about the way that that needs to evolve to also include the capitals as well. Global frameworks, it's really good to see all of the connections you will have seen through this process, including the timeline referring back to the Natural Capital Protocol. This was the basis back in 2016 for much of the work that you're seeing today. And in fact, Steph Heim was the technical director at the coalition at the time that that was developed, along with many other inputs from all the other people you're going to be speaking to today. So that consolidation of work is really important. And I think this is something about where we are at the moment in this space. If going back 10 years, there was lots of experimentation on ideas, there was some harmonization, there was the building of an ecosystem, there was lots more activity, and natural capital goes back 30 or 40 years in application. But over the last 10 or so, there's been a lot of consolidation in that space. The next period of time is about now standardization and consolidation. It's about making sure that instead of there being the 14 different methodological approaches at the back of the protocol, you've actually got a framework you can follow. This is really important because what it does, and this is what the ISO standard is doing, is it builds confidence. And in our annual survey of the global community that are working on this impact and valuation agenda, it was very, very clear that by far that 2/3 of the people we interviewed said that the biggest barrier is confidence. So it's not that it's not technically, I mean, technically we can do this. Yes, it might be a little bit difficult, but we can manage those things. It's not that. It's not that it's not a benefit to this, as we just saw Etche just show us, the benefits that companies are seeing from applying natural capital. The challenge is really the confidence. And this means that when you put it in front of your CFO or your investors or your board or some others, they turn around and their first reaction is, oh, that looks a little bit different. Why would I do that? And therefore they revert back to what they were doing before. If we can build the confidence in this work, then we'll be in a situation where the first question won't be, oh, where did that come from? Can I trust it? The first question will be, how can I use this information to make better decisions? And that's exactly what ISO and the BSI are trying to do with this project. So if we can go to the next slide. I talked about the consolidation in this space. There's been a very important one that we've just completed ourselves recently, and that's the merger of the International Foundation for Valuing Impact into the Capitals Coalition. So the IFVI came out of the Harvard Weighted Accounts. This is another initiative that was spawned by the Natural Capital Protocol and the Natural Capital Coalition work. Which, just to explain why we're the Capitals Coalition, a few years ago we started to unite the Natural, Social and Human Capitals Coalition work together. As Etche was saying at the beginning there, although this is natural capital, it's really important that we look across all of the capitals in a concerted effort and not just at one of them. Just looking at nature alone can be as dangerous as just looking at financial or just looking at social or just looking at human capital. So this merger that has just completed is creating an impact value standards board. This board has just been launched. It's got obviously the great and the good in the space of valuation. And its purpose is to standardize the pathways that we will be using that you would then plug into the ISO 14054 balance sheet work. So when you're looking at water, when you're looking at waste, when you're looking at all of the different drivers of natural capital loss or growth, then actually we need a standardization of what you would include and what you wouldn't include. What the IFVI is doing and in its merger into the Capitals Coalition is helping us to consolidate its work that it had started with the Value Commission. Now, the Value Commission was set up, once again, the great and the good in the space, to be able to create governance around this work, to also build more greater confidence. So by that, I mean notes that you can attach to your balance sheet. How do you structure those underneath present accounting rules? We're actually housed within the Chartered Accountants building and the space that they've got. And all of that work has to be built back into the accountancy profession. And accountants are getting very excited about this balance sheet work and the language there, and we'll be progressing with some of that. There'll be some announcements coming up hopefully in the next few months about more work with the accountancy profession to embed this work that we're hearing about today into the way that your colleagues in business and in other organizations will be using from the financial and accountancy departments. So these standards that we're developing, not only will we be creating the minimum requirements that you will use, but also the comply or explain process. So this is, once again, something to look out for. There's already several of them that have been completed, including water and climate. There's more underway at the moment. But these are the work that you will need to help to feed into the processes that we're talking about here. And this Impact Value Standards Board will be a central part of that standardization process, along with the governance, like I mentioned, that is essential to take us through to build that confidence in this work. If we can go on to the next slide. I mentioned about the integration of the capitals. Really, really important that we don't just look at one capital at a time. Now, this work was actually started from a lot of testing within the food system. Originally, we helped to produce the economics of the environment and biodiversity work that was relevant to the UN on food system change. And we worked with many, many hundreds of different businesses within the food sector to look at the trade-off between the capitals. That was back before 2020. We could have produced this document quite quickly, therefore, because technically the trade-off between the capitals, as Etche was already saying, all of the capitals, and as Dasgupta said in the review as well, all of them depend upon natural capitals. So there is a hierarchy, there is a structure to the way that we look at capitals. The challenge is about getting the buy-in of the community. So not just the accountants, as like I was saying, but also the economists, the governments, the businesses, the financial institutions, and the civil society groups. So what the Capitals Coalition has been doing over the last 5 years is bringing them together behind this so that there is a concerted effort, a belief that this work that we're releasing here is their work as well. It isn't just something that is being imposed. This is something that the community backs. And that is really important, not just with the work that we're hearing about today from ISO, but also across the whole space. So what we released here was the Capitals Protocol, which combines the natural, social and human capital protocols into one document, and also the governance for valuation, which I mentioned, which not only looks at how we might attribute valuation of natural and social and human capital, but also, and by that I mean like the scopes 1, 2 and 3 that we would be using for climate, but also looking at what information has to be transparent, what information should we have confidence in as a user, and how we can actually present some of that. So this is very complementary to what you're hearing about today and helps to support the work that you're hearing about on the ISO 14054. If we can go on to the next sheet. So we're talking about balance sheets here, and you may have heard of this project. There's a we do a monthly briefing note which goes out to thousands of people on balance sheet accounting. And the nature on the balance sheet work that we've been doing with Systemic, the Land Banking Group, and the Centre for Global Commons is really looking to try and structure a process here that is complementary as well, and you'll see ISO 14054 here. So when we're looking at the discover phase, we talk about the Natural Capital Protocol, and we talk about the TNFD, the Task Force for Nature-Related Financial Disclosures, helping us to do that work on discovery. So this is the assessment side of the work. The TNFD, very much, and if you talk to Tony, the CEO there, and Emily, who in fact used to work with us on the Natural Capital Protocol, they'll tell you very categorically that is very much connected to the Natural Capital Protocol and came out of that work, and that's why it's so consistent with all of these things that we're doing. So the TNFD is consistent, don't let anyone tell you different, with all of this work on valuation and capitals. And that's where, as Etche was just saying, the ISO 14054 can help you to deliver on some of those things. Although it's not focused on just disclosure, it can help you with those things as well. If we're moving into this quantify stage, you then have the system of environmental economic accounts. You also then have the ISO 14054 that we're talking about today. Really important documents. And now we've got that standardization from ISO to help us to do that in the private sector. The SIA obviously can be used in private sector work, but is mainly used for national level accounts. If we then, what we're trying to do with this project is also trying to recognize that value. So we've been able to bring together a big group of different people, including central bankers, including financial institutions, including new asset managers and asset owners, looking at actually how those assets could be actually realized in financial terms. And you'd need to be able to understand what's going on the balance sheet to be able to do this. To be able to recognize value, you need to have, underneath the IFRS guidelines that are already out there, the accounting rules, you need to have control of an asset, you need to have reliable measurement, and you also have to have a future possible, probable economic benefit or obligation. We now think that that is possible in some cases, and I'll get in a moment to actually an example of how we're doing that. If we can go on to the next slide. So the scaling up of this nature on the balance sheet then takes us through that assessment that I was talking about, the accounting, through to the financial ability of this, but then also into market prices and natural capital assets. If we look at a big food company that has been doing a lot of work, they've been investing, I won't give you their name, but you'll probably work out who it is. They've been investing an awful lot of money, several billion a year, into regenerative agriculture. That is seen as a cost in their business because it's not being brought in to the way that they're running their business. And yet I would argue that is an investment for a food company to be investing in regenerative agriculture, because that's exactly what their future is going to be. If we start bringing this into natural capital, we can start bringing some of those numbers actually into the accounts, into the way that they're engaging with their investors, into the pricing in the markets, into capital assets. So some of the things we're looking at here is a natural capital asset class on stock exchanges. We're looking at new products and services from investors that will recognize the value that is shown within these ISO accounts that we're hearing about today. And then we're looking at the codification of this, and we're working not only with governments and central banks, but also with some of the economic power holders in the system, including the IMF, World Bank, and multilateral banks, in the way that they're codifying and structuring this. We need this ISO work that is being launched today in order to be able to do that. And that's when we start getting the rewarding of the nature on the balance sheet coming back down. So this isn't just an exercise of accounting. This should actually lead to better accounts, but also to the driving of financial capital into the aspects that we need it to be investing in, i.e. nature in this case. And if we can go to the last slide here, we've got here applying this in a balance sheet aspect with the forest sector. So what we've been able to do is we've brought together forest sector companies managing over 23 million hectares. This is about 40% of the global private sector owned forestry around the world. So we're talking about a significant proportion of privately owned forests. The question that they had, going back to that last slide, was really about how do they manage to get the right level of capital investment into forestry? Because at the moment, forests are at the same scale of investment as mining and other extractive industries. So the cost of finance for them when they're trying to raise money is high, but the returns from forestry compared to mining and other things is very low. And yet the reason why that's happening is because the investors are looking at forestry as simply an extractive industry in times of climate change, where therefore there's going to be more pressures on them, and therefore it's a high risk to invest in. And yet we know that forestry actually produces a lot of additional benefits, and we can show that on a balance sheet as we are here. If we can show that balance sheet in such a way that we can prove that there are additional benefits coming from forestry, i.e. as you all know, the carbon sequestration, the filtration of water, creating places that people want to be, the recreational use, all of those things, and good sustainable forestry, will the investors change their investment pattern? So what we've done with this project is we've brought the investors into the room throughout the whole project. We're looking at the way that we structure this balance sheet, and we'll make sure that's consistent with all that we're hearing about today. And what we're going to be able to do here is hopefully encourage those investors to change the way that they're investing. And if that happens, this could be one of the biggest changes in forestry that we've ever seen, actually. Because if the cost of financial capital reduces because we're able to show on the balance sheet that actually nature is actually being protected and conserved, and not just the financial returns, but the natural capital as well, that could be a really significant change to the sector as a whole. And we're starting to look at this across other sectors within agriculture and other sectors around the world. So I think this hopefully gives you an idea about how some of this work can be used, about how important the ISO is to building confidence. I was actually with Sergio and some of the senior team last week in Geneva, and then, sorry, some of the senior team from ISO last week in Geneva, and then in Davos as well. And in Geneva, we had the World Bank present for the first time a report on the importance of standardization. It's really, really important that the World Bank is now stepping in and saying how important it is to have standards like the one that we're launching today. One of the facts I picked up there, there's more standards at the moment from ISO on a crisp packet than there is on AI. I mean, that is quite astounding that we should have more standards there. But that standardization process is really, really important. and we're talking to the team at ISO about what other aspects within this whole sphere of work that we've got here should be turned into standards going forward as we move into this period of time where standardization is going to be key if we're really going to start protecting and conserving the natural capital that we have on this planet. That's it from me. I'm now going to hand you over to Ian Dickey, who's been on our advisory panel all the way through the process at the Capitals Coalition, and hand you over to you, Ian. There you go. Thank you.
You're still on mute, Ian. Yeah, I'm afraid you're still on mute on your phone.
Are you hearing me, Martin?
Yes, perfect.
Okay, thank you for that. Sorry, everyone. Pleasure to speak to you this morning from the UK. And thank you, Mark, for covering all that history. It reminded me of one thing going back to being in the author group with yourself and Emily and others for the Natural Capital Protocol, that at the time, part of your job, Mark, as our leader, was to remind people externally that we were writing a protocol and not a standard. And that inevitably led to the question of, well, will there be a standard one day? And as an author group, we could sort of imagine that would be the case, but we couldn't exactly envisage it at the time. But then here that future has arrived, and so it's great to be discussing that today. I'm going to put some of the use of the accounts that have been mentioned into a specific context related to some other standards I've worked on in the UK, and also the work of environmental economists in the UK through the UK Network of Environmental Economists, UCNE, that I'm pleased to be a member of. And so to start talking about UCNE on the next slide, UCNE brings together the practitioners of environmental economics in the UK and also increasingly internationally. So this includes the research community we have in students in undergraduate and postgraduate degrees that increasingly have environmental economics as part of their studies, the academics that lead those courses and often also provide analysis for governments, alongside consultants like FTech, who also work for the private sector, and then also all the decision makers that use that information. So we bring together the community who apply environmental economics in decision making. And the members of UCNE have been important in the development of the concept of natural capital. Several of our members were part of the Natural Capital Committee that advised the UK government in the previous decade, which led to our Natural Environment White Paper and Environment Act for England. Also leading and involved in many of the primary research on the value of natural capital. And also they started the process of thinking about natural capital accounting in the UK, which led to the BSI standard and then to this ISO standard, combining with many other inputs and expertise from across the UK and around the world. And yeah, our members also contribute to national natural capital accounts, or the SEA ecosystem accounting framework being applied by statistical offices, as Mark mentioned. And increasingly in the UK, we also have work on nature markets. And so, yeah, I was on the next slide. I was lucky enough to be the editor of the BS 701 standard published last year on principles for nature markets. So these cover the carbon, biodiversity net gain, nutrient and other nature markets we have in the UK. And demand for this standard came about because of people expressing concern over the credibility of the markets, their integrity. So 701 outlines integrity principles. And at the core of it is really important process of defining and recording how credits are traded. So they need to be additional, which means you need to have a defined baseline and a change against that. And they need to be transparent, so you need to be able to share that information with stakeholders. But also thinking about these markets, they work long term. So even the shorter term markets of nutrients are often 5 or 10 years. Biodiversity net gain is 30, and carbon can be 50 and 100 years. So we need a really robust measurement system for information before credits are sold, after they're sold, and storing credit in banking processes, for example. So an accounting framework is really vital to nature markets. I mentioned, the 701 standard was produced last year. That's the first in a suite of standards, which are shown on the next slide. So there's further more detailed standards being produced on biodiversity benefits, carbon and nutrients. So these can work as a suite of standards. And there's also a standard or code of practice in development on community engagement, which is a really important part of the land use change that can go into supplying nature market credits. So BSI has a program of work where we've developed the principal standards, then more detailed standards, and actually also now piloting work. So to provide guidance on the use of these standards by different stakeholders in the nature markets process. So suppliers, traders, buyers, and others involved. As I was saying, shown on the next slide, so the really crucial interaction with 1454 standard is how natural capital accounting can support that recording of data that is so important to nature markets. And buyers in nature markets are saying they want to have a process where the credits they're buying can be verified and validated. And that means a good structure of information. And it's really important because we need to be able to monitor changes over time. If you're supplying credits over decades, the environmental outcomes you get may not be exactly those that you envisaged at the start of the process. And actually, with selling biodiversity credits, a lot of organizations are quite cautious in how much uplift they will sell as they start engaging in the market. And if their environmental management enhances biodiversity by more than that, they can record and sell further credits, but only if they have a really robust accounting system for doing that. And that needs to record the extent and condition of natural capital, the benefits, those increases in whatever nature credit they're trading, and also a system that can record the trades. So if there's a liability taken on for management, revenue obtained from a sale, that can all be put into the natural capital accounting system and audited against the standard, which is why there's a really good synergy between 1454 and the requirements of 701 and the BS 700 series. So that will support the integrity of nature market credits. It'll enhance their value for sellers and for buyers. So it's a real win-win of having a more robust system, but also having a higher value product in nature markets. And also to join up that information with other ways it's used in decision making. So for example, if your TNFD disclosure relies on some kind of credit that's bought in a nature market, then having robust data on when that was bought, who's providing it, and the size of the credit would be really important so that your TNFD disclosures are robust. So it's been great to talk to you about that important interaction between these different standards that are emerging in the natural capital space, and I hope that can support an interesting discussion. Thank you.
Great. Well, thank you, Ian. Thank you, Etchi, Stephanie, Mark as well. Hugely insightful, and you wouldn't be surprised that there are lots and lots of questions for us to go at, which is fantastic. I'm going to start with a question from Stephanos. Stephanos asks, what is the maturity level with regards to sustainability that an organization needs to have in order to make natural capital accounting development a meaningful step forward? Mark, I wonder whether I can come to you on that one first off. And
thank you. Yes, so what we found with most people when they're starting to apply natural capital accounts is that the first year leads to an awful lot of understanding just about internal processes. So it helps them to identify where there might be data gaps or where there is a governance process. So a lot of that first year of work isn't necessarily about answering the question they thought they were posing, but about improving some of those processes in order to be able to answer it. So I don't think, I mean, we did set out in the Natural Capital Protocol some structure to what you might want to have done already. But with so many companies now already starting to look at reporting requirements or for other issues, it's actually, most companies will be able to pick this up quite quickly, I think, and be able to apply it. It shouldn't be much of a barrier. Obviously, there is the challenge with SMEs. We do have a challenge with being able to make sure that smaller and medium enterprises are able to do this. One of the things I didn't mention before is we've actually now collected a lot of the value factors, which is what you times an activity by. So you plant a tree, you times it by the science in order to be able to get to what the impact or the dependency might be to put into the account. We've got a lot of those factors, and there are now more tools and resources to help SMEs to get started as well. And I know several of the organizations on this call are very good at helping different organizations through that process.
You're on mute, Martin.
Right. It was bound to happen, wasn't it? I'm going to go a question to.
Sorry, Martin, can I just add a couple of things to what Mark said? Thank you very much. The starting point of ISO 14054 is establishing the purpose. And that's very deliberate starting point, because we want to make sure that within any organization, natural capital accounting adds value. And depending on where you are in this journey, it will add different types of value. But establishing why you're doing it, what kind of decisions you want NCA to help, will definitely ensure that you get the best out of this exercise. Also, we say, think big, but start small. Think about all your impacts and dependencies, but you don't have to quantify and you don't have to value all your impacts and dependencies. You need to be, of course, very transparent how you cut that long list down to your starting point, but you have the freedom to do that, to show what works for you, what you're ready for, what you can integrate into your decision-making business models. And as long as you document it, you have the freedom to make that choice.
Brilliant, thanks, H.A. Stephanie, I'm going to come to you. So Francesco said that you mentioned a dedicated section on data quality. They're curious to know what the expected output would be. Are practitioners required to report the confidence level in a qualitative or quantitative way?
So yeah, thanks for a great question. Yes, there is a need to report out on the type of data that you've used and your confidence in it. So what we expect people to do, standard expects people to do, is explore the relevant types of data, state why they picked certain types of data, and then provide a level of confidence, if you like, on that data. That can be qualitative ranking or a quantitative ranking. It's really up to those who are using it to decide how they evaluate that confidence, but it would be expected that that was covered as part of the documentation process for the outputs.
Great, thanks. I'm going to come to Ian. There are a couple of questions at the tail end that would be kind of worth just picking up. So one was from Hashim, who said, is there any real-time example where natural capital accounts has been applied in nature markets in the UK and otherwise? And a supplementary from Stefanos is, how can monetary flows from credit production and transaction be decoupled from pure natural capital monetary benefit flows? Bit of a tongue twister, that one, but
yeah. So firstly, on the experience of using them, as I said, there's pilots going on at the moment. So organisations have are being audited on some of their processes to test that. But they have structures being audited where they've recorded trading, and that's also been the case with some of the clients FTech has worked with, providing them with baseline accounts, and then they've and training them to use their own accounting skills to record their trading in that structures. And we know those organizations are still operating and trading successfully. So we know that process supports their business model. On that question about decoupling the monetary flows or the revenues from a credit sale from the wider value of natural capital. The structure of the 1454 standard enables that because it can distinguish between the physical data and the monetary values that arise to wider society and to the private organization. So when an enhancement's made to the environment before it's sold, then the value of that would be not achieving a revenue, so it's a benefit to wider society. When there's a transaction made, that becomes a private revenue, so the benefit would move into the private benefit column. So there's a way there of recording the transaction in terms of the benefits, but then there would also be a management liability taken on. So if you've supplied a biodiversity net gain agreement, a 30-year biodiversity unit credit, you'd have a management liability for 30 years, and that would show up in your liabilities. So it would, that change would be seen in two parts of the balance sheet.
Thanks, Ian. So actually, I'm going to come to you. So Bruce has asked the really kind of crucial definition of natural capital. Is a danger with the word stock that an organisation might lose focus on the configuration of natural features and processes that yield value. So, and a big thing that FTech, so yourself and Ian kind of emphasised in the UK National Ecosystem Assessment.
Yes, a couple of things. So the stock, thank you, Bruce. The stock of natural capital is our starting point because we want to know whatever decision we're making, whatever action we are taking or deciding not to take, the effects of all of those on natural capital, both quality, quantity of natural capital and where it is as well. When it comes to benefits from natural capital, Steph showed the structure of income statement and natural capital balance sheet, and very, very deliberately the values to organization and values to rest of society are shown separately, and that is to stop this risk that Bruce is mentioning from happening. So we're not focusing only on things, only benefits to the organization itself, but the impacts on others in the society from the way the organization manages the stock of natural capital. And those impacts could be negative or positive, but we want to be able to show that. And how the distribution of benefits changes between the organization and the rest of the society as the management changes, or as the organization finds funding, for example, through nature market transactions. And the accounts are set up to be able to record those changes. There's also a valuation element of that. Of course, these natural capital income statement and balance sheet are set out, the final products are set out to be in monetary terms, and we know that we can't put all the values and all the benefits into monetary terms, but that's why you're asked to document what has been possible to express in monetary terms, what has not been possible to express in monetary terms, and what are the implications of that distinction on the way that you interpret the natural capital income statement or natural capital balance sheet. So flexibility in what metrics you can use, and flexibility in scoping it, but responsibility and accountability in explaining how you did that analysis. We are trying to avoid what Bruce is warning us about.
Thanks, H.E. Coming on to Stephanie, and this is from Stephanos, what is the process of linking ecosystem extents, so from the registry, with specific flows of natural capital benefits? Is it part of the standards objectives, or are flows aggregated across all relevant ecosystem types for the organisation?
So thanks very much for that question, Stephanos. So the final output shows an aggregation, but underpinning that is the supporting statement. So if we think back to our physical flow account, we would have a number of different types of ecosystems, each identifying relevant ecosystem service flows, both positive and negative, under that, and how we expect those flows to change over time in biophysical units. We would then move to monetize that change in the monetary flow account, and then that final output might aggregate some of those pieces together. But the template shown really is a template for discussion. There are certain aspects that have to be there, like the value to business and the value to society. If you were to choose to separate out the habitat types, you could do that if you wanted to. It's up to the organization to determine what works best in terms of its approach and how that output is going to be helpful within the purpose for the account.
Great, thanks, Stephanie. We've had a couple of questions on the relationship to 14,054 and 14,001. So Crystal asks, how do kind of these fit together? And also Gavin has asked a little bit about that, but also the timescales for the change to 14,001. Maybe if I pick that up to start with, and then maybe actually you kind of jump in. So the first part is that 14,001 is just out for its final draft international standard consultation at the moment, so that's due to end in just over a month's time, and the updated version of 14,001 is due to be published in middle of April, so not too long, and we will have significant outreach, and we also have a session with BSI on looking at what those changes might look like. I think it's next week. So yeah, I'm sure that one of the BSI colleagues can pop the link into the chat for that. And there was a question in there from Gavin as well on the transition period, which will be 3 years. So there is plenty of kind of time for people to transition to the new edition. I think the key thing is that 14,001 is that overarching management framework within which different topics and disciplines can be brought together in an integrated way, and that those standards like 14,054 or 14,090 on climate adaptation, or the net zero standard, which is currently under development and been out for consultation. All of those are different than topic specific areas that be plug in and be brought within that kind of overarching discipline about how you just manage and improve your overall performance as an organization, how in an integrated way you can manage those risks and opportunities, and then provide that that kind of that information either into your customer base or into your other stakeholders, into some of the compliance reporting obligations that you might have. So I think that integrated way of bringing it into management, decision-making, control and improvement is how they link together. So very complementary and compatible. But actually, I don't know whether you want to add anything there.
Yes, thank you, Martin. I support your answer, and I just wanted to say it was a deliberate choice for us to bring 14,054 to 14,000 family, and we're very happy to be accepted into the family. The same goes for 14,007 and 14,008, which are about economic valuation methods, but they sit in the same family because we appreciate the importance of tying all these different types of information, approaches, and understanding of our relationship with nature. Having 14,001 in your organization, of course, will help you, but let's just make it clear, you don't have to have 14,001 to be able to do any of this natural capital thinking, including the standard.
Great. So we just had a question in from Hassan. Greetings from the Turkish Mercantile Exchange. As an exchange, how can we adopt and implement natural capital accounting? What would be the impact of implementing natural capital accounting on the agricultural market? Not sure whether I'm looking across my my panelists, Actually, you look to have a twitchy finger. Did you want to have a go at that, or Mark?
Well, I'm Turkish, so you don't hear from colleagues from Turkey often in these things. So let me take a stab at it to start with. I haven't worked for a mercantile exchange, but I know that that particular exchange is very much aware that if you don't have, say, soil, you don't have crops. If you don't have crops, you don't have goods to trade in any kind of exchange. So I think, first of all, an exchange that sits at that strategic point has a leadership role that it can fulfill very successfully to raise that awareness, raise awareness of dependency of anything that you trade on nature. Secondly, we have worked for investors that have a strategic position across different types of natural capital account, and they invest in agriculture, infrastructure, and forestry, as I mentioned. And the way that they've structured their process in natural capital accounting is start at pilot level, work with 1 or 2 companies that they invest in to understand dependencies and impacts, to understand the implications for how that particular business is managed and how the investor can support that particular business in managing their natural risks, nature-related risks and opportunities, and what the implications are for portfolio-wide decisions. So it could be that the investor makes decisions about what to invest, how to invest, and whether they could attract premium for their investment products because they are supporting enhancement of natural capital. We're seeing all these conversations being had. In that investors pool, I'll also put insurance companies. How could they invest in reducing nature-related risks? Can accounting help them to see where the money goes and what kind of returns they get in terms of risk reduction or in terms of opportunity enhancements? So there's a leadership role. You need to talk constantly about impacts and dependencies on nature, but also you can start trying at a pilot level and see if it's worth for you to expand to a portfolio level. But let's not keep it all Turkish. Add, Mark.
If I can just add to that as well, as Ece was saying, I mean, we all know that the trade is going to be dependent upon soil. The problem is how do we actually get that into the decision? So we might know it, but the accounts at the moment don't lead us to actually take action. And these natural capital accounts we're launching today would give you that information to be able to inform that decision. And that's really important, that it's done in a standardized way, an ISO standard, that you can follow that. I know it's a voluntary standard, but we're also talking to the regulators at the moment in different financial markets about how that will change. And you will see coming up quite a few changes with that. Uganda recently was talking to the IMF about the restructuring of its debt that it's got in the whole country. And it said, well, we've got a lot of natural capital. Why is that not taken into account in the way that you structure our debt? And the IMF replied just before Christmas saying, actually, yes, we will take that into consideration. We'll start to think about that. So the idea that we're trading on these things, we need to have these standards that we're doing now, and you will see the regulators changing on the back of this, because it's giving them the information in a format that they can actually use, and that's really key.
Great, thanks, Mark. And I think it comes back to that whole kind of ISO issue around trust and comparability and consistency. So yeah, really good point, well made. Stephanie, I'm going to come to you. So Raina has asked, I don't really know the difference between value chain and extended value chain in your section. So would you like to elaborate if you could?
Yeah, I can. So thanks very much, Raina, for that question. Thinking about the value chain, it's really looking at the impacts and dependencies of what you're doing internally with regard to your value chain, again, regardless of ownership. But that extended value chain scope starts to include activities that are outside of the value chain. So by that, I mean things like if within your value chain you get water in a particular manner, then you focus on that as part of your value chain assessment. But in the extended value chain, you might look at a number of different ways that the provision of water in the market is changing, and how that then might also impact your reliance, impacts and dependencies on nature. So it's a wider look at the overall economic circumstance under the context of the account. Edja, I don't know if you want to add anything to that.
No, I think that was great, Steph. Thank you.
Great, thanks, Steph. So quite early on in the session, we had kind of quite a few questions that were coming on around, how does this link to TNFD in particular? It might be worth just, and obviously we kind of addressed some of these questions as we went through, but it's just worth maybe picking up on Hashim's question, which is how can companies which are already conducting TNFD leap assessments see the added value of 14,004. But Ian, I see that you've got your hand up, so I think that's probably on a previous question. So I'll let you come in first, and if you want to jump into this question, please do. But if not, then I'll come to you, Mark, if that's okay.
Yeah, thanks, Martin. I wanted to respond to a previous question and that one because at the core of it is the same answer. So in particular, that obviously we're talking about an accounting system, and that's to produce consistent data over time. So going back to the question from Turkey about the stock exchange, what will really provide interesting information is how natural capital data changes over time. And you have to remember that share values reflect the assets and the ability to pay dividends into the future, and the accounts look at, under 1454, look at the value of natural capital into the future. So they're aligned. And how that future value changes then can feed into our understanding of how to value stocks based on the future performance of the companies. So we talked about soil with agriculture. Another example would be fire risk in forestry. If that fire risk goes up, it affects the future value of the asset, and then that would be reflected in the share value of forestry businesses. It may be that their future revenues are lower because they expect to sell less timber, or it could be that their management costs are higher because they have to deal with increased risk. And both of those things would be captured in a natural capital account. And then, coming to that same answer about recording data over time helps us answer the other questions about how does this link to TNFD. So TNFD is a really excellent process for companies to look at their key dependencies on nature and the implications of that for their business. But then they will take management action in response to that and talk to investors. And they need to understand what is changing over time in exactly the same way. So it's that process of recording data consistently over time to make it really useful for management that I think makes accounting useful to those multiple processes.
Great, thanks, Ian. And Stephanie, you've got your hand up as well. So sorry, apologies to my panelists. I did miss some of the hands that were coming up in all the excitement of me reading the questions. And so we'll go to Stephanie and then to Mark, if that's okay.
Just a little to build on what Ian's talked about and how you can get the value through the TNFD process. I think there is a link between the identification of impacts and dependencies and then these management decisions that are going to impact over time. So looking at using the natural capital balance sheet, future looking output to support scenario analysis, which is part of the TNFD's LEAP approach, is really where I see this as being a very significant game changer, because we're trying to quantify what these different mitigations will look like over time, what they cost, and what the benefit both to the organisation and to society is. And without that information, how on earth can you tell whether the plan that you have put in place to mitigate these different impacts is really going to hold water? What other information is needed. So I think that that's where I see the real value here to supporting the TNFD process. So I'll jump off and let Mark take up.
Obviously, as you'll all be aware, the IFRS, the International Sustainability Standards Board, has agreed to set out this year some work based around the Task Force for Nature-Related Financial Disclosures, the TNFD. So within that, they're looking at financial materiality, building on what Steph was just saying, Andy, and how can you do that without actually having those financial numbers there? And this is what gives you the structure to be able to do that. I think the other thing is, though, that what we've been talking about today is about internal decision making. It's not aimed just at disclosure. It should be consistent with disclosure, but it isn't aimed at disclosure. And I think that that's really important. One of the things that we're doing, we've been working very closely with many organizations on an integrated profit and loss account. We've got the balance sheet here. We need the profit and loss account. We need all of those other tools that businesses are using day in, day out to make the active decisions, to have some consistency in the way that they approach that. And that management pack at the moment that you receive every month as on a board, that I receive on the boards that I sit on, at the moment just tells me the cost benefit analysis. It doesn't give me this information. So this information we've got here is really essential for driving those changes that you will want to make in your business to stay relevant in the present uncertainties of the world.
Thanks, Mark. Actually, there were a few comments that came in when you put your slide of the distribution of lots of case studies and examples, and also mention of marine. And people were wondering whether that was publicly available somewhere, or they were kind of quite interested to see that.
Yes, the map is in the slide pack, and I believe Andrea will tell us that this slide pack will be available to everyone who's participating to this webinar. You're welcome to go through them and contact us afterwards as well. To my knowledge, I think the marine accounts have been for public organizations, but FTech Ian leads all the marine work, so you might want to give some examples of why it's happening in this very, very challenging area.
Thanks. Stephanie, a question to you from Tuba. Thank you for your great work and presentation, definitely. Statement includes impacts and dependencies. How can the organizations identify their impacts and dependencies? Does the standard reference suggest guidance documents to identify them? Any sector-based guidance to identify impacts and dependencies? So what practical help and support is available for people to kind of delve into that?
Thanks very much for that question. So as discussed all the way along, this standard builds on some of the great work that has already been done. So I'm going to refer to the Natural Capital Protocol and impact and dependency pathways. Thank you very much, Mark. We didn't plan that. But also the TNFD sector guidance, looking at impacts and dependencies through the sectors. We've also got, I believe it's Business for Nature and WBCSD have sector guidance available across a slew of different sectors. So those are all practical examples, and for the ISO there is a frequently asked questions section where we answer some more of these questions to give practical advice in more detail, but we also have an external reference list that will include those links that I've just talked about. So we're building up on what has gone before rather than rewriting here and signposting that really important guidance. Thanks.
Can I also add, I mean, obviously the coalition, we all formed together. I didn't form it. It was formed by a group of people that wanted to collaborate together. I just didn't step back quickly enough and ended up leading it, I think. But the way that we're structured is that we are a global network that is helping to direct people. So a lot of my team's time is spent in directing people. In fact, Stephanie, I just saw an email fly through during the webinar that someone wanted to talk to Little Blue about some work that they needed done. So if we're set up as a service to help people to get to the right people that can help them with identifying impacts and dependencies or how to do this work. And obviously FTech and Little Blue Research and others are leaders in that space.
Thanks, Mark. Yeah, and I think just, in general, kind of capacity building and skills development, as new tools like this are developed, then there's a real important thing about upskilling people to be able to utilize these and apply them in practice and share their experience.
Yeah, can I just add as well, I'm also co-chairing the impact management platform at the moment that ISO is part of, along with all of the other bodies like UNDP and TNFD, and all those others are part of this body. And at the moment, we've been looking at capacity building and making sure there's consistency around the world in how all of us are rolling it out. So whether that's with the UN Financial Initiative or UN Environment Financial Initiative, or with the UNDP or ISO, all those, we're working on consolidation and understanding of capacity building around the world. So I think it's great that we're writing these standards. We're now getting consistency in what we're trying to do, but the capacity building is part of that next step, that we have to make sure that we're not then making people think that TNFD is something different to what we're doing here. It has a different purpose, and therefore there will be some differences, but actually they're all built around the same platform, and that's really important to know.
Thanks, Mark. Question for Stephanie. Thanks for your interesting presentation. Frank can see a direct link between the natural capital accounting income statement and financial accounting income statements, but not so in the case of the balance sheet. I think we've probably covered this, but in financial accounts, the balance sheet is backwards looking, while in 14,004 it seems to be forward looking. The question that Frank poses is why?
It's a good question, but I also think it's a really valid point. So we specifically wanted the natural capital balance sheet to be future looking because of the need to change actions into the future and address nature loss, rather than look back at what has already happened. So while we can do that with the natural capital income statement, aligning it with the financials for the previous years, say, what's of more importance for us as in development of the standard was how are we going to get people to understand the mitigations, the behavior change that they need to take forward into the future, and that required a future looking output. So we aligned on the balance sheet, and interestingly enough, Mark has talked through the nature on the balance sheet project, which is specifically looking at where nature's values can be integrated into a financial balance sheet. So that then complements this this part of the work. So there's three different elements here: that income statement looking backwards over 1 year to align with the income statement in financial terms, but then that deviation, the future looking element for this, and the opportunity then to integrate into the financial balance sheet through some of the work that that Mark's been talking about. So it was deliberate, but it was those future actions we really wanted to drive.
Great, thanks. And I'll come to you actually, and then to Ian, because you both had your hands up.
Thank you. I wanted to come in on the future-looking balance sheet. To me, this future-looking balance sheet helps us answer the ultimate organizational sustainability question. Am I investing enough in maintaining or enhancing the natural capital I depend on so that I can continue to receive the benefits from natural capital into the future? So sustainability is about what we're doing now and its impacts onto the future, isn't it? How can we maintain the benefits? So comparing the two sides, the top and the bottom of a balance sheet and all the supporting schedules, I think helps us identify what risks there are into the future, how you can manage those risks, and mirror thinking for opportunities, of course. What would happen if we don't take action? How would the benefits go down or disappear? and what happens if we do invest more in natural capital? How can we maintain or even increase the benefits into the future? To be able to answer these questions, you have to have a statement that looks into the future. And as Steph said, it's a very deliberate choice on our part, because we deliberately want to answer that question. What happens as a result of actions today? What happens into the future?
Brilliant, thanks, Ece. Ian, you've got your hand up.
Thank you. Yeah, I wanted to just input on the point about resources and skills to build natural capital accounts. And just our experience with clients is some of the really large ones have hired, say, a new post in their organization to manage the accounting process. But even then, most of the resource to do the accounts comes from other people in the organization, because accounts bring together a lot of data that organizations already have and enhance it by combining it with other data. And so it needs good data management skills. And you think, well, where are we going to get those from? Well, in financial accounting teams, you have people who have lots of skills in finance, but another way of looking at them is they're effectively, really good applied statisticians. And it's in parallel with national ecosystem accounts under the CEA process. It's led by statisticians for good reason, because it's about high data standards and consistency of data over time. So natural capital accounting doesn't require lots of new resource or post. It requires actually using the resources that are already there between the sustainability, environmental management, and financial accounting teams' capacity in an organization. And many of the things that natural capital accounting does are things that were already being done. You already have to record if you're purchasing a carbon offset, for example, or you're taking different investment decisions on the environment. So you're already spending resource doing those things. But actually, if you bring those resources together and combine that information in a single system, it will improve management decisions, and it will use the resources you're already spending to record data in a better way.
Great, thank you. And I'm conscious of time, so Mark, you put your hand down. so that's fine. I'd like to say a massive thank you to Ece, Mark, Stephanie, and Ian. Really insightful, really helped to set out clearly both 14,054, but also how it relates to that wider context of how organisations and society are having to deal with nature and natural capital accounting. So I'm now going to hand back to Andrea, who's going to provide a quick summary, I think, and signpost you to some useful resources.
Thank you, Martin. A fantastic Q&A session, and thank you all for all of your questions today. And a big thank you, of course, to all of our speakers, and again to you for joining us today. It's been an incredible look at how BSI 14054 can and is making a difference, and the importance of nature overall. We're very, very proud to work with such exceptional individuals and experts in their field, coming together to share their knowledge and expertise nationally, but also globally, for the greater benefit of our industries and people. We hope you're leaving here today inspired and with a great understanding of natural capital accounting. We've collated a list of resources which we hope you'll find useful. Some of these have also been shared with you in the chat by our support team. Thank you for doing that. This includes a discount code as well, which, should you wish to purchase a copy of BSI 14054, will remain valid until the 27th of February. We also hope to see you next week at the ISO 14001 webinar, highlighting what's new in the latest edition of the standard, which, as Martin mentioned, will publish mid-April of this year. The recording of today's event will be made available, and all of our speaker slides as well after the session ends. We thank you all again for joining us today and wish you a great rest of the day. Thank you.